Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. I'm with Ireland Como Lafoy. Today is the 15th of September, 2025. We'll get into what's going on in the marketplace today, but I did want to talk a little bit about this week's Statistics Canada report. In the next day or two, or tomorrow, we will likely see the analyst expectations for the Statistics Canada principal field crops model based production estimates. So this is a model-based production estimate. They don't survey farmers anymore. Um, they feel that this is a better way of estimating yields and production. So far, I don't really feel that confident that they know how to do it or that their algorithms are getting any better at this point. But we will see some predictions coming out probably tomorrow from analysts like myself who um, submit estimates on what Statistics Canada is going to say. But I do have a bit of a caveat here. I do think that the big ticket item for Statistics Canada, or that the market is going to be watching this month, is about previous years' production and even the rest of the supply and the rest of the demand table as well. Now, in our videos and in our reports, we've been highlighting the errors that we think Statistics Canada has made in their estimating of supply and maybe even demand. So there is a lot that could change here. I just wanted to make note of that before we move forward, because on Wednesday morning we will get that report. I don't think that the number reported versus estimates is really going to mean a whole lot, because the estimates are so hard to make when the bulk of, I think, of the changes that Statistics Canada will make will be from past years. So, having said that, let's move into what happened in the marketplace today. We did see canola down $6.90 today, at 632.80. Minneapolis wheat was down a cent at 570 and three quarter. Kansas was down three quarters of a cent at 514. Chicago wheat up 1.5 cents at 525. Soybeans down 3.5 cents at 1042 and three quarter. Soybean oil up just 9 points at 52.26. That's cents per pound. Corn was down 6.75 cents today to 423 and a quarter. Canadian dollar was up 35 points to 72 and a half, or just over 72 and a half. Live cattle and feeder cattle had a good day today, making up some of the losses from last week. $4.62 of gains in the live market at 234.60 a hundredweight, and feeder cattle up $8.70 a hundredweight, up to 354.50. We'll show some charts on that in a second, just to show you what that means from a charting perspective. Let's go into canola here today, though. We did see some losses, as we mentioned earlier, about $7 a ton. As you can see here, we are having, or canola is having, some problem getting above the 20-day moving average. You can see that the 20-day moving average continues to be a bit of a resistance point for canola here, as does the top of this channel. You can see this channel, it's been trading inside this channel quite aggressively, but I would say that the 20-day moving average seems to be the stronger of the two resistance levels. It seems to be a good support level, but the channel seems to be a good support level, but the 20-day moving average appears to be a bit more of a resistance level. So, today's losses, although, one day doesn't necessarily change a trend very often, this is not one of those cases. There's still a mild trend upward going here, but we are still in that kind of process of making lower highs and lower lows. So we're just cautious about this. About this rebound today is a little bit of a wake up call. We've had 3 days of positive movement in the canola market, and that's gotten some people excited. So we just want to kind of temper our excitement a little bit as we run through harvest here, which is currently ongoing. We'll talk about that in a second. I think one of the big things that is affecting the canola market, now this is just a snapshot here of the Canadian Grain Commission's weekly report. It is accurate, I think, to the 9th, or is it the 12th? The 9th or something like that of, I think it's the 9th of September. And as you can see, we've exported into the first, 6 or 8 weeks or so of the crop year about 500,000 tons. That's versus last year's 1.1 billion. Now, there's a lot of people that are commenting that is, you can see the loss of China in that. which is probably true. We are having a slower start to the export pace in canola this year. However, we're also having a slower start to the deliveries. That's been cut in half as well. To date, we've had 882,000 tons of delivery, and versus 1.6 last year. So, which one is the chicken and which one is the egg? Is the lower exports due to lower deliveries, or is the lower deliveries due to lower exports? Uh, if you have a opinion on that, throw that in the comments below. I'd love to discuss that. We'll talk a little bit here about harvest progress, because I think canola is in the throes of harvest pressure right now. This is the last Alberta crop report. Again, this is as of September 9th. We had 13.2% of the canola harvested at that point. That's quite a few days ago, so I'm sure that number is quite a bit higher by now. But still, in the last week or so, we're still in that big push of harvest in canola. A lot of the other crops have been completed. Like the winter wheat, for example, and even some of the spring wheat, I think would be much higher than this now. But that's just kind of showing where canola is in the grand scheme of things. Same thing with Saskatchewan, right? This is a September 8th, so it's a day earlier. 12% of the canola have been harvested in Saskatchewan. Most of the fall winter crops are done. And quite a bit of the durum wheat, a little bit of the spring wheat. So we're still in heavy harvest time here in Western Canada. I did want to kind of point out, I think I showed this in our last video on Thursday, but the canola crush margin is very good. It's above $190. This is for the January, if you're using the January crush formulas. So this is incentivizing further out, positivity in the canola market. I'm sure the crush plants are hedging this, particularly as it got up to the $200 a ton level. Now, these are just board crush margins, so it's just the calculations of canola seed minus the exchange traded oil and the exchange traded meal, or those weightings of that. So this isn't, necessarily crush plant margins by any stretch, but when you see margins like this on the board, that generally does mean that there is pretty good margins to be had at the crusher as well. So again, that's more of a medium to long term solution, but I think currently we are still in harvest pressure. We didn't get any help from the soybean oil complex today, or not a lot of help, although the soybean oil complex did outperform canola. So we did see some small gains in bean oil, but still losses in canola, which does tell me, traditionally or in the past, we've seen quite a lot of correlation between soybean oil and canola. And I think that has kind of waned in the last couple of days here as harvest is ongoing and there's a big harvest push. I think there is some good yields to be had, but I've also seen some disasters and things like that. So it's really up in the air as far as what the final yield will be. But I think right now, I think the market is pricing in something above average, and we'll see on Wednesday what StatsCan has to say. But again, who knows if the market will believe what StatsCan has to say anyway. Another interesting little development here in the canola market is we did see the speculative managed money position move into a short position in canola. It's now short about 1,500 contracts. That's not a huge short by any stretch of the imagination. It's not going to cause necessarily a huge overwhelming rally due to a short covering rally. What'll actually be interesting to see is if traders continue to push this lower and into a larger short position, because over time that means that there could be some short covering. But I actually estimate, based on the previous couple of days here since Tuesday, that that might have actually flipped and gone back into at least an even position or close to zero, based on the 3 days of positive trade that we saw into the end of last week. Again, they cut that off again on Tuesday, so at the end of trading day tomorrow for the next report, which is released on Friday. So, if we do see a continued push short, though, I would that would be a bit of a bit of a canary in the coal mine. I think that if the trade is looking to build a short position, they probably have a good reason to do so. All right, going into the wheat market here, it has been struggling. All three of these classes, actually, Chicago performed the best today. It actually moved above the 20-day moving average for a short period of time, but wasn't able to close above that. As you can see, and you could probably argue if I'm drawing this trend line correctly here or not, but there is some signs that the trend is changing. The 20-day moving average is starting to level out here a little bit after some continuous falling. What I would really like to see is if we can get that the Chicago wheat market up above 535. At that point, the 50-day moving average will be there, and there's that previous low there. So that could be some key resistance. And if we move above that, that would be a good sign. That might take a little while though. So I'm not holding my breath necessarily over the next week or so, but that's something that we could watch out for. Spring wheat has just been a dog, and it just seems to be anemic and unexciting. And a lot of that has to do with the volume. We've seen actually a significant drop in volume since the end of August here, or in through August when there's a lot of hedging done. So this is just since moving to the MIAX, it's been a tough go for the spring wheat contracts, and in attracting volume and attracting interest in the contract. So we are seeing a whole lot of volume in this contract right now, and it's just being a bit of a dog. So that means that the elevator companies are likely trying to incentivize or disincentivize, depending on which on what you on what's out there, um, using the basis and those types of things. And we may even see currency have an effect on the prices as well. So just to keep that in mind. Again, here's HRW wheat. It did move above the 20-day moving average as well, but basically changed or finished unchanged on the day. I would say one of the bigger things we've seen today was corn and how much it backed off today. So it opened significantly lower than the close on Friday. It opened lower than the 100-day moving average that you see here. You can see that corn's been kind of trending higher since the beginning of August as the yield estimates are coming down. Right now, that doesn't look like it's changing. You can see here that Friday brought us right back up to mid-July or a mid to late July resistance. And then kind of looks like it's failed at this point. But you can see some other things happening here, the 20-day crossing, the 50-day, and things like that. There is a short-term higher highs, higher lows pattern forming here. So I would say that overall, I would say this still looks, short or medium term bullish, but I would like to see it kind of break Friday's high in order to get that next leg up. Here is the soybeans as well that saw some gains after the USDA report, even though the USDA report was largely bearish by the statistics, but the market didn't behave that way. We rallied both corn, we rallied soybeans. Soybeans rallied above the 20-day moving average. It was basically finished the day unchanged, but below the close on Friday, similar to corn, except not quite as drastic of a loss. In fact, we did make a new high above 1050 today in the bean market. I think that's positive as well. All right, some really good stuff happening in the live cattle market today, or both cattle markets today. We did see it make up a bunch of those losses from last week. It came back again, that 20-day moving average. I know I probably sound like a broken record talking about that so much, but it is important. It can act as resistance now. Now that it's broken below that which was acting as support, it can act as resistance. So we want to make sure we watch for that. If we see these cattle markets trade back above that 20-day, I would say that's a positive. And the same thing can be said for the feeder cattle market as well. Very similar patterns here in both. All right, one last thing here. This week, Wednesday afternoon, we will see the Fed announce their interest rate policy. Right now, there's about a 96% chance that they'll cut by a quarter point. So that's where the market bias is right now. There's a very small percentage, like 4% of folks, who feel that they are going to cut by half a percentage point. So I would say at this point, a 0.5% cut would be seen as the surprise. And the quarter point is basically baked in fully to the market at this point. All right, like we said before, 75% of you that watch our programming are not subscribed. So if you're not subscribed and you want to get more and more Canadian ag market information, click that subscribe button on this YouTube channel. You can also subscribe to our premium content by going to canadianagmarkets.com/subscribe to get our morning commentaries, our ad hoc commentaries, like what we'll put out this week after the Statistics Canada report, as well as our weekly report, which we produce on near the end of the week every week. Go to canadianagmarkets.com/subscribe to subscribe to that, and we'll see you again tomorrow.